Good morning everybody and welcome to this Smart Charts European Squawk Box session. Hope you're all well and capitalizing on the moves that we've already been having early this week. Volatility has kicked into a higher gear. We were expecting this as we were highlighting these webinars from last week and even this week as well. So let's have a look at the key economic announcements affecting the flows of the markets, have a look at some potential trading opportunities that have been highlighted from the London and Sydney trading floors. Okay, so overnight we had the Reserve Bank of Australia keeping interest rates on hold at 4.35% as expected. The central bank reiterated that its policy needed to stay tight, even though rates are at a 12-year high. Other central banks like the Federal Reserve, European Central Bank, Bank of Canada have already started their easing campaigns and have started cutting interest rates. The market was pricing in a 64% chance of a rate cut in December, but now that has fallen to 59%. And we have been highlighting the Aussie as a really good candidate for trading opportunities towards the upside, because we know interest rates have a huge impact on the flows of the currency market because of the interest rate differential strategies that are being done by money market fund managers, where they would borrow money in low interest rate countries and go and park that money into high interest rate countries and pocket the difference between the two interest rates. So this is actually why the Australian dollar has been pretty strong against many of the currency pairs. Everyone knows that the Reserve Bank of Australia are going to have a higher interest rate at the end of the year than maybe some of the other central banks are already cutting interest rates. And this is why we've seen a lot of strength in Aussie against the US dollar towards the upside. We've seen a lot of weakness in Euro Australian dollar to the downside. And we're going to be looking for more opportunities on the Australian dollar for a push to the upside. It is a bit overstretched. It has been going up for quite a while. There's been some great trading opportunities. We already know that some of the bigger picture, bigger time frames on like Aussie US are coming in some major daily levels of horizontal resistance. So at some point we've got to be prepared for a bit of a reversal, a bit of profit taking. But for now, the momentum is strong. And right now where we are is mainly for you fast time frame traders to look for the continuation, because sometimes when you're further into the trend, you really need to go to the lower time frames to squeeze out the reward to risk in the fewest amount of pips as possible, because longer you're in a trend, at some point it may reverse, especially if you're coming into some key resistance levels. So something to be mindful of, but we'll look for that continuation. There's still a lot of high impact news announcements coming out in the week ahead. We already had the key news announcements from Monday, the PMI data, which caused a lot of really good volatility, helped our Euro Kiwi trade to the downside and the phase changes, so that was great. We've had the RBA rate statement, and now attention turns to US economic data later on today, US consumer confidence report, which is basically an index which represents a survey of around 3,000 households in asking them to rate the relative level of economic conditions that they're facing. Now, the consumer confidence in the US, it has been rising really since May, and the market is expecting another rise in today's report as well. Now, we already had a really big interest rate cut last week, much bigger than expected. So, the US economic data, it may or may not have effects. It's a bit uncertain right now because everyone's already positioned themselves in the US dollar. But the key is if there's any really wild surprises, okay, that's the key. So the market is already anticipating, is already expected things, already positioned themselves. Everything's already anticipated. So if there's any wild changes to what the market is expecting, then that will be very interesting to see if we're going to get the US dollar continuing its weakness, or if we're going to start to get some reversals, because it is starting to get a little bit choppy. We did highlight that in the middle of September. We had some ranges like dollar Swiss, like pushing sideways, a couple of the other dollar pairs moving a bit sideways. We've had the volatility kick in a bit of a higher gear this week, which has been good. Let's see if we get the continuation though. But at some point, we know seasonally this tends to be a bullish time for the US dollar, so we'll be keeping an eye on break of structures, trend reversals, those kind of things. But let's see what the data comes out. If there's any big surprises, let's see if the volatility is tradable and we get some follow through. Okay, sometimes it's not, but but sometimes it is, and those are the fantastic moves that we really want to be focused on. So let's see how the day unfolds. Make sure you are tuning into all the live training webinars every single day, so you too can identify the opportunities with all the traders in the Smart Charts trading floor and room, and also participate and capitalize in the market movements that are developing. I'll do my very best to keep you updated in these webinars, but make sure you're tuning into all the other live ones throughout the course of every single trading day. For now, let's go into Smart Charts and highlight a few opportunities from the London and Sydney trading floors. Okay, so here we are on the daily chart phase changer strategy on Euro against the Japanese yen, and what we are liking so far is on top of what Smart Charts is finding. And if you're not too sure how the algorithms and the AI technology in Smart Charts is helping you, then make sure you're looking at all the materials in the e-learning portal section of Smart Charts, attending all the live trading webinars and workshops and boot camps and courses and all that kind of stuff, and to help you build the right trading plans, in really capitalizing in the power, the combination in the power of using AI, algorithmic technology, and a bit of human insight, real-time pattern recognition as well. So that combination, which is very powerful, okay? So on top of what Smart Charts is finding, we can see visibly we're at an interesting area on the chart, because what we notice is we're in this moving average zone. Okay, so the bars are still hovering in this zone, and we can see historically in the past, this is where sellers have actually turned up here before. All right, so in this instance, we're looking for opportunities to see if sellers are actually going to turn up here again. We also like the fact that since sellers drove the market lower from the first time off the moving average zone, it's come back into the moving average zone, they drove it lower, so we do have that all-important lower low, lower high cycle developing, evidence of institutional speculators selling at high prices but also willing to keep selling beyond low prices, and we're still in that structure. That structure hasn't broken, so of course we can only trade the structure we have in front of us today. So on top of having the right market structure, we're in the zone where sellers have turned up here before. We also have a confluence of resistance areas coming into play here as well. So first of all, we do have these low points that could come into play. So if you look at here, historically you had this low, this low, this low, this low, price has broken through. Maybe that support level could turn into a resistance level. Okay, so we have that sort of switchover, which could become quite interesting. And we also are trading around an angle of price, which does become a little bit more interesting to see if also sellers are going to turn up at this angle of price. So what do we have? We have a confluence of resistance levels, okay, at this area where sellers may decide to turn up and drive the market lower. Now, the volatility of the yen pairs is very high right now, okay? So there's a couple of ways we can actually operate here. Of course, the daily chart setup is even good to go. But if it goes maybe a bit sideways, which it certainly could do, if it does kick into a higher gear eventually, then we can also go to lower time frames and capitalize on any 4 hour, 1 hour, 30, 15 minute chart strategies, right? And this is why we trade multiple strategies across multiple time frames. So it's another chance of a re-entry to get involved in a move just on a lower time frame as everyone's accumulating their positions. But we start off on the daily chart, the big picture, so then we can also trade the lower time frames as well, okay? Now, on top of that, what is also most interesting is, look, we haven't got down to this low point yet. So there is a chance that price will just gravitate towards this low point and maybe want to retest it. And we did highlight that big picture. Big picture, if we look right down the bottom here, this is a big area where we were looking for the market to get to, all right? So with the confluence of resistance areas that we have here, from the moving average zone, the market structure, to the trend line, to the resistance line, we are looking for evidence of sellers turning up and driving into this low point, all right? Now, again, this is obviously very far away, this level. We may end up targeting to that level, we don't know yet. We've got to get into the trade first, and then of course, as the flows develop, we'll see how strong the trend is, and then we can start scaling into a trade and start building positions if it does unfold. Obviously, there's a chance it could just break this structure and maybe all the thing will go sideways and the whole market condition will change. But we can only trade with the information we have in front of us, okay? And that's the only way you could be consistent in what the market is actually telling you to do. So on top of highlighting the trading opportunity for us, it would also help to do the risk management work and portfolio management work as well. Because if you click the sell icon, And we'll populate an entry price at the blue dot, stop loss at the red dot, target the green dot. These can all be adjusted according to your own user preferences, of course. We'll also do risk management calculations as well. Important to make sure you're keeping that risk low, making sure you're able to deal with the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the season. And I like to set an expiry for current bar close and then decline or accept the trade. Basically what that means is if sellers don't turn up by the end of the day and keep the momentum going, pending trade expires, didn't win, didn't lose, didn't cost us anything, because we like to trade momentum-based markets because this is a momentum-based trading strategy. Okay, so there's plenty of other trading opportunities to focus on, so make sure you're tuning into all the live trading webinars all throughout the course of today and actually highlight them, trade them, capitalize on them with the live traders inside of Smart Charts. But in the meantime, all the best for your trading today, and I'll see you next time.